Perfect. So as promised, what we will do is, we'll try to do we have only one thing left. The fifth chapter, questions and answers. I know, of course, there is chapter 1 and 2 as well, but anyway, that is like, not a major thing. We'll try to do that as well. Okay, let me quickly share the screen. Okay, you're able to see my screen, right?
Yes, sir.
One second, please. People are joining still. Okay, I think let's get started. So the first thing what we will do, I think we have studied hedging, speculation, arbitrage, and option strategies there. So we'll go through a couple of questions there. Just be cognizant that, there might be some things that you might not be able to answer. Don't panic, right? We'll go through the concepts. Okay, that's the sole purpose of this, session as well. Okay. Yeah, go ahead. Can get started. Okay, so primarily what is he saying? What is the calendar spread arbitrage, right? Okay, just give me 1 second. Let me get my chart also there for me. Okay, go ahead, guys. Come on, what's the answer? Go on. C is correct. Yeah.
C is buy the cheaper
Buy
month, sell the
cheaper
dear
month
month.
and then sell the dearer month, right? Calendar spread is always about the
Buying.
2 months primarily, right? Yeah. Most of you got it correct. Nice.
Even sell cheaper month and buy dearer month is also correct. No?
Yeah, that's correct. Yeah, option spread can be structured so that the profit and loss are limited.
Yes, true.
It's true. Only premium.
Yes. So that is the whole purpose of the option, right? So what happens in futures is, for me, the profit is unlimited, loss is unlimited. But whereas in the case of the whole purpose of option as an financial instrument is, my profit can be unlimited, but I'm trying to limit my loss. But I can create even a structure so that my both profit and loss are also limited. Okay, it's pure risk management here. Got it? It's very easy. Should not get confused. Next. Investor is bullish on the broad market, but bearish on the selected portfolio companies. We have done this actually.
B.
Which position best expresses this relative view?
Buy index
B.
futures and sell the selector shares.
Like this.
Yeah. That's what we discussed, right? I think when we discussed about the hedging as well, I think we have done reverse, in the case, right, there are a group of portfolio companies that are out there for me. To hedge it, what will I do? I actually sold the index futures. That's what we learned in the class. Here, it's a reverse thing, right? I'm bearish in select portfolio companies. So what will I do? I will actually take a negative position, which is sell those and buy the index futures. Okay, guys, everyone clear?
Yes.
Got it? Perfect.
Yes.
Yes, sir.
Next one. What is primary purpose of hedging?
Reduce potential business loss.
Yes. So the whole purpose of the hedging is to reduce the loss. Okay. Next. Mutual fund wants to reduce the effective equity exposure from 50 to 40% by without selling shares. Okay. Can it use index futures? Why B? The whole purpose is hedging now here. Who said B? What did I just say? You said B. See, guys, what is he
B.
saying? I wanted to hedge it, right? So primarily I wanted to reduce the equity exposure. He is
Yes.
selling, I don't want to sell the shares. Okay, what is he implying there? He is trying to take a, sell position, short position there, right? Can we use index futures? Obviously, right? We can actually sell the index futures and can actually risk the, hedge the entire position. Yes or no?
Yes.
The answer is yeah. Guys, clear? Everyone following on the hedging. The whole question, in this, okay. The whole questions are around so far, whatever questions, 5 questions that we have seen is around hedging only. Okay. How do you hedge it, etc. and all? Because the whole chapter itself is hedging. Sorry. When we come to the bull and bear spread, we will do that as well. Everyone clear on this concept, right? Yeah, please.
Yes, sir.
Yeah.
Next one. Don't jump, please go through it, please. Yeah. Answers.
A.
Why?
I'm taking as a one side view. So I'm just buying the futures and keeping it.
Primarily, what am I doing? I'm actually doing gambling here. Okay. What am I actually doing? I'm actually, tossing a coin and then I'm saying Bhagwan, paisa de do mere ko, right? Just ensure that the results are very strong and so that I make money. Okay. I'm not putting any logic here. I'm not using any hedging or arbitrage. So it's pure gamble, right? I'm just going to casino and then actually throwing a ball there. So speculations are done by, retail traders. They bring in liquidity. And in this case, we are buying stock futures before results because strong results are expected. Okay, the line itself says it's expected, right? So we are anticipating and taking the trade here. Okay, clear, everyone? Okay.
Yes.
Yes, sir.
These are very easy ones, but just we are revising the concept so that you need not actually go and put more effort there. Okay, next one. Political news is expected to cause a severe market decline. What directional future trade matches a bearish view?
B.
Still index futures. B.
Yeah. Guys, very small group, please, everyone, I want everyone to participate. Yeah, please.
Sell the index future.
The answer is B. We are selling the index futures. That is correct. Okay. Next one. Yeah, tell me now this one.
Calendar spread.
CC vertical spread.
Hey,
Oh.
who said calendar? Come on.
Calendar
Calendar.
is different months. Calendar. C is my answer.
The actually answer is C here, right? What are we trying to do? Different strike prices, but
Different strike
yeah,
rate, same.
let's go back to our bullish call spread. No, what are we trying to do? We are buying, lower strike price and selling higher strike price, but with the same expiry. That's what we're doing in the bullish call spread. No, we've seen that example. What is it? The strike price is 1 crore for me, right? What am I doing? I'm actually buying 95 lakhs, and then I'm actually selling 1.2 to someone else. Okay, go back to the same example. Now let's revise this a little bit here. Someone said calendar spread. Calendar spread is always different expiries. Okay, please remember, different calendar months, different spreads is calendar spread. Okay. Now, what is straddle?
Calendar Buying the same expiry.
Buy and sell is same.
Same put and call.
You can call.
Very
and
good.
expecting a
Very
different-
good. Lovely. So it's the same expiry, but what is it? Same strike there. Okay.
Same
What
strike
are
there.
we doing? Go back to our example again, right? What is happening? We discussed this housing example, right? 1 crore. Either I will have an ORR, right? A big lane going next to my house, or I'm going to have my chemical plant, that is coming through. Either I'm actually super bullish or I'm super bearish, but I don't know which one is going to happen. So what am I going to do? I'm actually going to, do a call and put at the same strike price at the same expiry. But it's two things, right? I'm taking one long position and one short position. And again, it is like 50-50 probability there. Okay. So that is straddle. What is strangle?
The same viewpoint, but we're taking a different strike prices out of the money.
Correct.
Calls
This
and
is in
puts.
the money strike price. We are revising the concepts also, right? Parallel note, for you, straddle is what, the same thing, but here I'm actually, instead of, in the straddle, I'm taking the strike price, the entries at once here. In case of the strangle, I'm taking it 0.95 and then 1.05. Okay. Because I'm little greedy there and then just wanted to make money. Okay. There, what is it? Out of the money, things. Okay, guys, everyone clear? No?
What is the
Yes,
diagonal
sir.
spread, sir?
And answer?
Sorry?
Answer is C. So what is diagonal spread, sir? Is there something like that?
Diagonal is also the same, in the vertical spread itself, we can revise that. Diagonal, we'll come to that in a bit, I'll let me go through the diagonal is, and we will go through this, wait, hold on. I think I have given that in the notes as well. Yes, or we will do one thing, wait, whenever we have questions, whenever we have doubts, we just need to clear it then and there. It's
Right? It is vertical spread
sorry.
with same strike prices, same expiry, different strike price. It is vertical spread, right? It is.
No. Vertical spread is
Yeah, it is the same different strike price, same expiry.
yeah, but let's get that ironed it out. Can anyone figure out the exact page number by any chance? Okay, perfect. Vertical spread, horizontal spread, and diagonal spreads. So bearish हो गया, horizontal हो गया, and then short and straddle हो गया. Bullish vertical form, bullish vertical, bearish vertical, bearish spreads, horizontal spread, diagonal spread, right? What is it saying? Diagonal spread involves. Please move this. What is that?
You cannot able to view that, sir.
Okay, you are able to see this now?
No.
No.
Okay, hold on. Might be I need to bring it to this screen. Now,
Just seeing the questions and answers.
questions.
No,
Just give me one.
not yet.
Just give me 1 second. Hold on. Let me share my screen again one more time. Let me share my entire screen. So now you should be able to see it. Now,
Yes.
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 okay. So I think that he has given just one line. We will remember that. Diagonal spread involves a combination of options on the same underline but different expiry dates and different strikes. That's it.
Same expiry. So where is it, sir?
Here, you are not
Almost.
able to see this?
Yeah, you can see.
Okay. Now
Yes.
let's understand this a little bit here. That's what I said. When we have
Sim-
questions,
It
we will go
combines
back
the-
here.
Sir, simply opposite of vertical and horizontal.
Yeah, that is, primarily
Diagonal.
there are two things, right? Combination of options on the same underlying. Underlying is either a call or a
Automated
put,
machines
but
efficiently
different,
remove the thick outer husk. Workers monitor the process.
different expiry dates and different strike prices. Okay.
And it is
It is said that it is suitable
Combines the-
for OTC.
Correct. Yeah. That's why they haven't discussed much.
Kiranji, it
Yes, sir.
combines the features of both vertical spread and horizontal spread, right?
Yeah, seems like that. Yes.
But what is horizontal spread, Kiran?
Calendar spread.
Horizontal
Okay.
spread is nothing but calendar spread, sir.
Okay.
Okay, got it.
We discussed that.
Yeah.
Okay. Yeah. Okay. Okay.
got
Hold on. Let's move on to the questions. Okay. Now you got it right.
Yes, sir.
Let's see if we get a question on horizontal spread. We'll go through that. But for now, let's stick to options. Hold on. Okay. You're able to see the questions now?
Yes.
Yeah. This is vertical. Same, different, but
Yes.
same
This
expiry.
is vertical spread. Correct. Yes. Always remember, sir, we discussed the bullish call spread. What did we do? We actually sold at the lower strike price and sold it at a higher strike price, but with the same expiry there. Different strike prices, but with the same expiry. Okay. Now, let's move on. Yeah. Go through that, please.
No, it's not changed yet.
It's not
Question is
changed, sir.
same.
The question is
Not
Same
able to
que-
see?
It is the
No.
same question.
Question 8 is still showing there. Question 9 is not come.
Hold on. Why is this? Now?
Oh.
Till it. Slide is not moving.
Fuck, 1 second, guys. I don't know.
Okay.
Now
So
it
this
is
is fine.
Now it's moved.
Yeah.
Now are you able to see?
Yes.
Okay. Yeah. Sorry. No. This is also having Monday news for Monday evening today. Okay. Go ahead. Okay. No. Wait. Hold on. 9 हो गया. This one, please. Which position is not a hedge when the investor has no pre-existing underlying exposure?
B.
B.
Buy an OTM call to cap the loss
B.
on shorts in the future.
Last short. That's what I thought. Yeah. D. Protect equity portfolio, right?
No, don't put that.
It's not hedge.
Not a hedge. That's the point.
Not a hedge. Oh, sorry.
Yes.
Yes.
Tell me which is not a hedge.
B, sir.
B. How come?
B. Yeah, it's not a hedge, right? See, position is not a hedge when the investor has no pre-existing underlying exposure. So it does not have any positions right now. So, and it's not a hedge as well. That is buying a OTM call and put and selling a OTM is in a hedge, right?
These are also, first two are also not.
Sir, one thing. Let's go through this one more time. Okay. First things first, in this sort of questions, right, try to first eliminate the answer, eliminate the
Wrong
ones
answer.
which are not relevant. Okay. Just one second, please. Let me, complete. First things first, let's go to D, right? Buy index puts to protect an equity portfolio. That is a hedge, right?
Right.
So what is he asking? Which is not a hedge, right? So eliminate D. Now, buy 1 month USD INR futures against a known future dollar payment is purely a hedge. We all know that.
Purely a hedge,
Okay.
right.
So eliminate C. Now, you might be confused between A and B. Let's go through this now. Buy an OTM call to cap the loss on a short index futures position actually it seems to be hedge. Okay, that seems to be hedge. Okay, now what is A? I'm actually buying an OTM index call and I'm actually selling an OTM index put. Okay, first things first, tell me when
The
I'm selling it.
arbitrage.
Guys, please let me speak. No, guys, please request. When I'm explaining, please don't comment. Okay, kind request. I'm giving you ample opportunity to speak. Okay, when I'm selling an OTM put, okay, when I'm selling a put, what position am I taking there?
I'm taking a buy view.
It is only answer B, right?
No. I'm
Bullish view, yeah.
taking a bullish view. Guys, listen to this carefully. Okay, just please listen to this carefully. When I'm selling a put, okay, what is the position that I'm taking? What is the long position or short position?
I'm
It's a long
taking
position.
long position, right?
Very good, right?
Long position.
So I'm actually buying a long position and I'm also buying a long position. So am I hedging there?
No, one-sided view.
So what is the answer here?
Should be A.
Everyone clear now? Now you can talk.
Yeah.
Everyone clear now? Right? So
No,
in this
no,
sort
not
of the
clear.
question,
Not
okay,
clear.
I'll explain one more time, guys. Please listen to this. In this type of the questions, just try to eliminate the answers, right? What are we talking about? We are talking about having a hedge position. Okay. What is a hedge position? I have a position. I should have an opposite B position, which is a opposite position. That is what is hedge, right? Everyone with me? Yeah. Okay.
Yes, sir. Yes,
Hello.
sir.
Okay. Now we can talk. Sorry. Yeah. I want you guys to talk. You are such a lovable guys. Okay. Now let's go to first option D, sir. Right? I am buying an index put to protect an equity portfolio. Am I hedging or not?
Yes, I'm hedging.
Hedging.
Everyone, am I hedging or not? So remove answer D. Now I am buying 1 month USD INR futures against a future dollar payment. Okay, is it a hedge or not?
Hedge.
It's a hedge.
Everyone, sir, I think Vijay, who asked? Vijay, sir, you got it, sir?
I asked.
Yeah, you got it, sir.
Yeah.
You're clear, sir.
Sir, A, can you explain the A?
One second. We are eliminating, sir. We are coming from the bottom. Okay. Now, B, I am actually doing a buy an OTM call to cap the loss on a short index futures position. This seems to be hedge, right? This seems to be hedge. Okay. Now, in the first one, what am I doing? I am buying an OTM index call and I'm also selling an OTM index put. This also might look a hedge because why? We are talking about call, we are talking about put. You might feel, okay, hey, this is also a hedge, right? But now, now let's read through the sentence first option carefully, right? Okay, there are 4 positions always, right? In call and put, right? Buy call, buy put, sell put. Okay. Now, buy call, I'm taking a positive direction. Sell call, I'm actually taking which one?
Opposite
Negative
direction.
Opposite direction.
Yes.
Buy put, what am I direction I'm taking? Negative direction.
Long side, yeah.
Sell put, what am I direction I'm taking, sir?
Bullish view.
Sir, Vijay, sir.
It's opposite of opposite, right?
Which is what, sir?
So it's a buy only.
Very good. So what am I taking? I'm taking a long position, right, sir?
Correct.
Got it. Now, in the first option, what am I doing, sir? I'm actually buying an OTM index call. What is the position there?
In long call.
Long.
And I'm selling an OTM index, but what is the position I'm taking?
Long.
Long.
So am I hedging there?
No.
Got it?
Correct. Yes.
Okay.
Both long.
Instead,
Okay.
everyone got it, right? Instead, the option should have been
Yes.
what for it to hedge? Instead, rather than selling an OTM index put, buy an OTM index put would have been my answer. But long and two long positions is not a hedge. Okay. So the ideal, the answer there is A.
A.
Because we are asking for the false state. Everyone clear on this concept?
Yes.
Got it, right? Just how to read through the lines. It's very easy. Just don't, I think if you ask me, I think we discussed about, the first version, right? If you can attempt this in first version, do it. But when you go come in round 2, that you can also attempt this, right? Again, up to you. Everyone clear, right? Good.
Yes.
Can we move on? Okay,
Okay.
perfect. Okay. Okay. Question 10. What is the question? A investor owns equities and wants to offset the risk of falling prices. Very easy. Yeah. What is he trying to do?
B.
Short futures. Short
Very
futures.
good. That's it. Short futures. Got it. Perfect. Guys, please, if you have any doubts, please stop me, because we will revise this and then you're done and dusted once for all. Okay. I don't want you to go back, pick up the book and then start reading from A to B, right? Our goal here is, once you go through this, you should walk into the exam hall and clear the exam. Okay. That's why we are spending so much of time. Okay. The thing is, if you have any questions, please stop me anytime. Okay. Okay. 11th one. Trader is bearish on certain companies but bullish on the overall market. What strategies? Yeah. 2 legs here, right?
So A, sell the selected shares and buy index futures.
Very good. Lovely.
Yes, A.
Everyone got it, sir?
Yes.
See, simple is bearish on stocks, so sell the shares, and then he's bullish on overall market, so buying the index futures. Nice. Next. Now you're all pros and experts. You're all fund managers. You know how to hedge. Yeah. Next one. Portfolio manager.
C.
Buy index futures.
Buy index futures. C.
By C.
Yes. Very, very straightforward thing. Okay. Next. Existence of a related commercial exposure is central to the distinguishing hedging from speculation.
Commercial center.
Related commercial exposure CP. Central distinction. False. There is true or false. Yeah.
It's true, I think.
True. I
True, I
think.
guess.
Yes.
There's nothing like think, it's actually true. Okay. So what is he saying? It's very simple, right? What is he saying? What is speculation? Tell me.
There is no relation here. The related commercial exposure.
Yes.
Hmm.
So primarily, what is speculation? We have seen the previous example there, right?
Yes.
I am
Getting an
actually
inside
buying
view.
the stock in the anticipation that the earnings are coming good. Okay, that is pure speculation. Okay. What are those called? They're actually sort of called naked positions, right? I'm not hedging against anything there, right? That is called naked position. We discussed that multiple times. But what is hedging? I'm actually taking a call and I'm taking a put, or I'm actually selling stocks, I'm buying index. Okay, so what am I creating? I'm actually creating a relationship, between these two legs there. Okay, so what is that exposure? Is it commercial or not? It's obviously commercial, right? Because there is a premium, associated here, premium associated there. We have done those examples yesterday, right? Net payoff, etc., and all that. So the primary distinction between speculation and hedging is whenever we are adding more elements into it with a commercial angle to it, that is called as hedging. Everyone got it? Now?
Okay.
Clear? Okay. Move on. We need to finish all the 60 at least, for the chapter 5 today.
It is covered call writing.
C.
Covered call writing. C.
Writing.
Very good. It's called covered call writing. Lovely. Next one.
And which are these?
Yeah, I think we might not have discussed this topic, but we'll discuss this.
Smaller securities for shorts. Yes.
I think it is cross hedging, right?
Cross hedging is my guess.
No, it's
Just
actually not cross hedging. The answer is B.
Cash and carry.
Reverse cash and carry. Yeah.
Yeah. So
Cash
the
and
answer
carry.
is, yeah, the answer is B. It's reverse cash and carry. What happens in the reverse cash and carry is, we guys, just give me 1 second. Let me close this WhatsApp forever. Sorry, 1 second, please. Yeah, I'll keep talking. In the reverse cash and carry, what actually happens is, sorry, 15th, right? I sell the assets in the cash market and actually I buy the futures there. Okay. So primarily what am I doing? I'm actually doing a borrowing. So, in that instance, the borrowing is actually needed to deliver that, short sell there. So don't get too much into the details. It's just like 1 or 2 questions you might or might not get, but ability to borrow securities for short selling, what is required, reverse cash and carry is what is required. Okay. For now. Everyone clear? Can we move on?
Yes, sir.
Can you please repeat again reverse cash and carry?
So primarily what am I doing is I'm actually selling assets and I'm actually buying the futures, in this particular model. Okay. So if I have to, say suppose during the time of the expiry, if I'm actually short of, some stuff
Money.
there, I have to figure that out, right? In terms of, I have to meet that, obligations and expectations, right? So what do I have to do there? I have to borrow the securities for short selling primarily. Okay.
Right.
Yeah. So reverse
Okay.
cash and carry.
Like kind of like auction may like you are buying from auction.
Yeah,
Something.
correct.
Right. Okay.
Again, don't get too much into the details for now. It's not required at all. Okay, next one. 16.
Short straddle. Right?
Short straddle.
Yeah.
Very good. Short straddle, right? Buy very low volatility in the range bound market because it can go either ways primarily, right? No, yeah. Short straddle is the answer. 70. Vertical option spread is correct.
So C.
No, it's not actually.
Is A?
I think it is B or C.
Yeah, so it is actually B, So what happens is, so tell me this, right? In the bull call spread, what are we trying to do?
We are buying the call, lower strike buying the call, and higher strike call we're selling.
Right.
Right.
In the bear
So it
call
is-
spread, what are we trying to do?
We
We are selling the. We are
higher
selling first and buying the upper.
Very good,
Sell
right?
the-
Selling the lower strike call and buying the higher strike call, right?
Okay.
It's the cheaper higher strike call. So in that instance, what are we trying to get? Since we are we are selling the lower strike and buying the higher strike, we are actually getting a net credit from that particular spread. Okay. Don't worry too much, but just remember this. So in the case of the bear call spread is the one which actually creates that initial cash flow for you.
Beer put spread also, right?
that also comes, right? That's my thought process.
Beer put spread also, like we are
Yeah.
shorting the put and
We are getting it in the lower one, right? So that also gives you cash flow.
No. It's not exactly, opposite of the stuff there, right? It all generally depends on that. Ideally, see, if it is bear call spread, it should be bull spread, put spread, but we'll go revise this one more time, But for now, I think, actually the answer is the bear call spread is the one which creates initial cash flow. I'll reverse this concept and teach you again one more time. then. Okay, next one.
Take stocks. And it is different purchase.
Yeah.
Okay, quickly.
See, sir, use short hedge by selling index futures.
Yeah. Why?
No, we discussed this on the day one of hedging, sir.
Oh, I haven't clicked away.
Any more answers?
I go with the A.
Sir, A, looking C, A is
Looks A.
See, what I've been trying to do, let's go back to, the previous example, we discussed this in class 1, when we started chapter 5. What did I say? Say for example, I wanted to buy Reliance. Okay. What did we say? If I have to buy 500 quantity of Reliance, it would cost me 6.5 lakhs or something. Okay. Instead, what will I do? I will actually, I
Sell the future.
anticipate the Reliance price to go up, right? So instead of buying, the quantity completely in cash, I will actually go and buy the futures. What
Hmm.
futures I will buy?
Reliance futures.
Reliance futures.
You are making our evening. Reliance futures are the long
La-
or short?
Long heads, long.
I will
Long
sell.
only, right? Because I'm expecting the price to go up. So what is the answer here?
Long. So,
Yeah.
The answer is A, right?
A,
So
long hedge. Okay.
look here, right? The fund has collected it in NFO and they wanted to buy the index stocks on the next month. Okay. So they're very bullish on it. First thing, what is he saying? They're bullish on it, right? Now, how can they hedge the risk that prices rise before purchase is by purchasing the index futures there. Okay. Perfect. Okay, let's move on. You got it right. This is like the first one. There are no different legs there here, right? See, there are two types of hedging, right? When I'm bullish on a particular thing, I will go bullish. When I'm bearish on a particular thing, I'm going bearish. But if I have taken already a position which is long, and if I have to hedge it, I will go short. In case if I'm going short and if I have to hedge it, I will go long. Got it right?
Yes.
Long, short, long, short, long. Okay.
Yeah.
So these are the four, quadrants that you have to see where exactly it fits in. Okay. Next one. This is what? This is two leg now.
Yes.
Now tell me.
C.
See, very good.
Sell index futures. Selling index futures.
futures. Very straightforward, right?
Yes.
Opposite of earlier question.
Correct. Exactly. Yeah. Sorry, I missed one.
20th.
Simple. Very easy.
So this naked call.
Naked call.
Naked call. By
By
simple only one position.
all
Nice.
positions.
Okay.
No. B.
Why?
But equity oriented mutual fund only they don't do hedging, right? They only buy the stocks and hold it, right?
Sir, you're thinking too much. Actually, mutual funds actually do hedging even today. They don't do naked thing, which is what SIF as a product is. Anyone else? What is the answer?
Sir, yes.
Yes. Yeah.
They can hedge it, sir. They can
Yes,
hedge
yes.
it by selling the index futures. Yes, the answer is yay. Okay, next one. We studied about put call parity. There's a simple thing. Don't worry about that. It's mostly the statements that it will give, but just what is put call parity? The answer is yay.
Yeah.
Yes, sir. Yes.
Different.
Sorry.
Same underlying, same strike and expiry.
Same strike.
Sorry,
And
my
same
bad.
expiry.
Same strike and same expiry. Yeah. Nice. Next one. Wow. Get my this. Get me. So,
चल तो green light आ गई.
okay. What is the answer, guys?
Really, buy a
Is it
put,
A?
buy a put on the stock.
Buy a
Yes,
put on the stock. Correct. Yeah.
yeah.
No, not fluke and random guess. No.
No,
No,
this.
You want
Okay,
the
buy-
downside protection. Yes.
Yes. Yeah.
So we
got
still
it.
not entered to that frame of mind, sir. So
Which frame of mind?
just guessing and getting it right.
Oh, okay. Got it. Nice. Next. Stock future is materially overpriced related to the carry adjusted future.
This is basic. Cash and carry.
This is the cash and carry model.
It's
know,
A.
Buy the stock and sell the future.
It's
Very
A.
good. Yes. The answer is A, right? Why?
So cash and carry
is A.
should always have the stock in hand. And
No,
only
no, no,
cash.
not that. Primarily what are they saying? It's relatively overpriced, stock futures. So I'm going to sell the future and then sort of buy the, stock to do that and a carry adjustment there. Okay.
Cash and carry.
24. Yeah. Next. Sorry. Sorry. Yeah. Okay. I think a little bit of math. Okay, I'll give you the formula. I don't think we have covered this part, right? Please jot it down. If not, I'll actually share it. You can do that as well. So, no, we have done this.
Yeah, done.
We have done this. We have done this. No, we did this. We did this. But again, anyone want to attempt? We did this actually, I remember. Okay, don't worry. What did we do actually? Right, say portfolio has portfolio value is 50, and I discussed, if you remember, I discussed this concept of beta, okay, and I discussed this concept of weighted beta as well, right? For the stocks, right? Stock times, the particular weightage of the stock times its beta, we will get the entire stock value portfolio beta, okay. Now, what did we say there? This is the portfolio value. Now I wanted to hedge against by buying the certain index futures. Remembering it? Okay. Everyone, we discussed this. Say I have this X portfolio, but I wanted to protect it by buying certain index futures. How many index futures that I have to buy was a question. Okay. So the answer here is 50 crores times beta 1.2 divided by your index 25,000 times what is the future slot size 75.
Yeah.
That will be your answer. You don't remember we covered this actually, I specifically wrote it also.
Sir, it will comes to somewhere around about the 650 lakhs into 1.2 divided by 25. Right. It comes to 240. Then if you again go it again 75, it will be different, right?
Why are you getting confused, sir?
Sir, and I'll just share my understanding. So
Sir,
50 times
sir,
50,
repeat the
50
calculation,
crore, 50 crore times 1.2, sir.
50 lakhs, 50 crores. Okay, got it. 50 crores into 1.2. Okay. Right.
Okay, let's quickly do this. You want? Are you putting
320?
it?
Is it
Ah,
320?
320. The
Ah,
answer is 320. Correct. Bingo. Got it, everyone?
Yes, I got it. Share the calculations.
Answer is
50 crores
320 is
into
320.
Sir, answer is
no, 50
320.
please explain, sir.
320. 50 crores into
Sir,
1.2.
50 crores, 50 crores into 1 point.
Into
So
1.2.
don't even convert into 50, no, into crores. If you're getting confused on the, numbers there, right?
Yeah.
So 50 times 1.2 divided by 25,000 times and into 25,000 into 75. How much you got? 0.000032, right? That's it. So 320 is the answer.
Sir, 50 into 1.2 divided by 25,000
Into 75.
into 75.
Yeah. Everyone clear? We discussed this, in the class on how many, futures to be sold.
sir. Answer is
320, sir.
320. Okay.
Okay. Okay. Let's move on. We have more questions on this. Don't worry. Yeah. Here also.
$300. It is 300.
Yeah.
Is it 300?
26. The answer is B. 300. Yeah, you got it. Okay. Okay. It's the same thing. You can do that again. I think there are a bunch of things. It's the same thing. I don't know why there are so many questions there. Okay. Okay. Let's do 31. It's very simple.
One 250 into 50 into 250 into 200.
B.
Very good. The answer is profit of 70,000.
20,000.
How much profit he got? 350 per contract. 350
Into
times
50.
4 times 50. Yeah. Okay.
50 into 50 into 4.
Yeah. Everyone got this one?
Yeah,
Any questions here?
it's straightforward.
Guys, everyone got it?
Sir, please explain the previous one. 59 question number.
50.
9. Previous one.
59.
It's the same thing, sir.
Sir, I didn't get the answer correctly. That's why.
Which one, sir?
This one.
300.
30 crores. 3 crores.
So the formula is 30 into 1.0
Divided by
divided by 20,000
into
50.
See, the denominator is 20,000 times 50. Okay.
Okay.
Numerator is 30 times 1.
Okay. Right.
Now you should be able to get it.
Okay.
Got it?
Got it. Thank you.
Perfect. Okay. The answer here is 70,000, guys. Should be very, very easy. Don't get confused on this. Okay. Next one. Okay. Should we do this? I think these are very easy though. Yeah, attempt this. I think we'll do that. Don't worry. Yeah.
700
Actually,
into
practice anyway.
150.
You have to do that also. Yeah.
700 into 150.
B. 1.05.
What is the answer?
B.
700 into 150, I think.
Sorry.
This B. 1 lakh
It's B. 1050.
105,000, right?
Yeah.
Okay. First things first. It's a profit or loss.
It is profit.
Perfect, right?
It's profit. Why? He shorted at 22,500. It ended at 21,800. He actually made a profit of 700.
Yes.
700 times 2 times 75. Okay.
Yes.
So that's your calculation.
So
Okay.
1,05,000.
Yes, 1,05,000. Got it. But in case, so imagine if it is, for example, if it closes as 23,200, what will be your answer?
You have made a loss.
Loss of 1,05,000. Okay.
ஆ,
guys?
வீட்டுல தான் இருக்கு. வாங்க வாங்க வெல்கம் வாங்க.
Okay. Nice. Next one.
60, 12, 70, second B, 72,000.
72,000. Okay. Perfect. It's very simple. 3 future long contract and how much profit I'm making? 60 plus 10, 70, 70 times 3 times 400. Okay. Simple calculation.
72,000.
Next.
Two thousand 25 and 35.
Again, 1 lakh five.
Again, the same thing. 1,05,000. Yes. Yeah. I think you can do all this stuff. I don't know why the same thing is happening. Okay. Let's go to 37.
100 strike for the same expiry.
Now tell me, what is this?
Buyer 100 rupees strike.
100 strike.
Bull call spread.
No.
Full call spread. Why?
We are selling the higher one. and buying the lower.
Buying the
110
low-
assuming. Buying the
Correct.
lower and selling the higher one. Okay.
Buying the lower one and selling the higher call. Okay. Bull
Perfect.
call spread is a very, very, very famous question, for this exam. Okay. You should just remember, buy lower, sell higher. Okay. That's it. So the strategy here is bull call spread. Okay. Here, 38.
The beer call spread.
Bear call spread.
Bear call spread. Okay. Everyone following it, right? Please, only
Yes,
two
sir. Yes,
people
sir.
are
Just
answering. I
opposite.
know,
Yes, yes.
but I want you to guys to follow this. Okay. Next. 38 हो गया. 39.
It is again a bull call bull put spread.
Put my hand. Strike put.
A bull put spread.
Bull put spread.
Yeah.
That's it. Got it. You guys are awesome. Yes. You got it.
Good.
Next one.
Bear.
Beer put
Bear
spread.
put spread.
Bear spread.
Okay. Yeah. Next. Next one.
Straddle.
Long straddle.
Long straddle.
Long straddle.
These are all very, very easy questions.
Long strangle.
Long triangle. Okay. Now attempt this, please.
Expiry spot is 18. 12 rupees का profit आ जाएगा.
Very good. Lovely.
That well. Yeah.
Very simple, no?
Yes.
Everyone got it? 12. The answer
Yes.
is 12 here.
Yes.
How much am I making? 100 to 118, 18 rupees is my profit. Out of that,
Minus-
I paid a premium of 6 rupees. So my profit, net profit is 12 rupees. Okay.
12 rupees.
Next.
It throws a lot of 100.
B. Profit of 13 rupees.
Yes.
13
Everyone
rupees.
got it? Again here.
Same.
Yes. Yes, sir. Okay.
100. My expiry happened at 82. So the price was on expected lines. 100 minus 82 is 18 rupees is the profit I gained. Minus premium I paid is 5 rupees. So I made a profit of 13 rupees at the end of the day. Okay. Next. It's the same thing. I think you can do this. I don't know why this. Okay. 49. Simple.
Is it B?
Cash and carry.
cash and carry, see, blindly go for this carry adjusted cost,
Yeah,
cash,
just
blah blah
cash
blah,
and carry.
arbitrage direction and all that, right? So cash and carry.
Mhm.
So reverse cash and carry.
This is reverse cash and carry, right? Okay, if you can hold on, we have just 10 more. Let's finish this off as well.
सर पिछले वाला दोबारा करना मैं क्वेश्चन पढ़ नहीं पाया.
Yeah.
Oh, sorry. Go ahead, sir.
Future
If future contract has carry, but oh yeah, it's reverse.
Okay. Oh. Let me see these questions. No,
If future contract.
generally they don't ask this, but I don't know why this came. But, okay, let's do from 55 onwards.
A company will buy shares after receiving the cash next month. Here's the market price.
Long hedge with index future.
Buy long Nick
Wow.
Collins.
Yes.
Someone already said that. Long hedge with index futures,
Index
right?
features.
Sir?
Yes. Yes.
Yes,
Yeah.
sir.
Next one.
Fund owns diversified shares and fears temporary market decline. Short hedge with index.
Short end is index features.
Short
Yeah.
hedge.
Very good.
Yes, sir. Short hedge.
Yeah,
index future.
Next one.
Fund owns diversified and fears. Which strategy fits this? An investor owns the stock and wants income. Not flat to mildly bullish. Flat to mildly bullish market. It is a covered call. No?
It's a covered call.
Covered call. Yes. Already having stocks. Yes.
Use the stock and bonds. The downside float without giving the upside.
protective put.
So
Yeah.
protective put.
Called
Yeah.
protective put. Nice.
Okay.
That's it.
Yes.
Here.
Steps in major announcement, but cannot predict the directions.
Long
It is
straddle.
long straddle.
straddle. Yeah.
Long straddle. That's it.
The trader expects the market to stay very close to the current level.
Short straddle.
Short straddle. Short straddle.
That's it. Good. Awesome. Lovely. I think these are the questions from equity mostly, right? That you will, actually see. I'll also see if we can pull some more questions for tomorrow, in equity. But I think this is generally, these are mostly exam related questions, and this is mostly the flavor that you will, see in this, right? We can stop here. We will do interested derivatives tomorrow, given the best interest of the time. Any questions on this? How do you find this? Tough, easy, okay, decent?
Very good.